Before I get into anything too deep, there's a few quick terms I need to run through for you to understand what's happening. Mining. Blocks are mined. In order to mine Bitcoin blocks, computers are used to solve complex mathematical equations in order to successfully mine a block. Miners are rewarded in Bitcoin for mining blocks. Now, what is a block? A block is a means of recording transactions on the blockchain. Think of it as a link in the whole network or blockchain. And then the blockchain, a permanent network of transactions performed with Bitcoin. Every deposit, withdrawal and transfer can be found on the blockchain, including where Bitcoin came from and went to. What is Bitcoin halving? The most common misunderstanding about the Bitcoin halving is that it affects total supply. This is false. Total possible supply is 21 million, with most of which being mined already. So why hasn't all Bitcoin been mined yet? This is where the Bitcoin halving comes in. The Bitcoin protocol itself ensures that a reduced reward for every block mined is implemented every 4 years. So by this, if I was currently to mine a full block of Bitcoin, it would reward me with 12.5 Bitcoin. After the halving, the same block will reward me with 6.25 Bitcoin. Now, what does this mean for Bitcoin price? The basic takeaway from this is that it ensures Bitcoin is an appreciating currency. As reward is decreased per block mined, supply is reduced. As supply is reduced, demand increases. And as demand increases, price will rocket. An appreciating currency is something that we are not used to, as the rate of inflation in US dollar ensures a depreciating currency, but I will cover that later. What have previous Bitcoin halving events looked like, I hear you ask? I will let the charts, 1 year on from halving, speak for themselves. The process of mining blocks ensures the integrity of the Bitcoin protocol itself. The more Bitcoin is mined, the more supply of Bitcoin is available. The more supply of Bitcoin is available, the lower the demand is. This would lead to inflation and devaluation of Bitcoin. However, this is a flaw that Satoshi seen coming, and his novel way to counteract the devaluation of Bitcoin is quite ingenious. By halving the rewards gained from mining Bitcoin, it ensures that less Bitcoin enters the market, thus reversing the supply and demand curve. If there is one key takeaway from this video, please let it be this. Bitcoin halving will decrease supply of Bitcoin to the market, which will, in theory, increase the price. I hate to speak in certainties when talking about the market, but this is a high probability price increasing event.